Well, good evening, everybody, and welcome to the June edition of the Roundtable. My name is Mark Robertson. I'm joined here by dear colleagues, knights and a damsel, Ken Kavula from the Mid-Michigan chapter and nationally recognized educator in the realm of investing. He's thought of around here as an investing raconteur. Good evening, Ken.
Good evening, Mark. How are you tonight?
And you can't say raconteur without thinking of Herb Lemcool from God's Country, Traverse City, Michigan. Welcome, Herb.
Thank you. Looking forward to it.
And for those of you that don't know Herb, I don't know who you are because Herb knows everybody. But if you don't know Herb, he's been working with investors. I think he's been involved in the formation of dozens of investment clubs. And we welcome you, Herb. Thank you.
My Cherry Capital has been over 30 years.
Yeah, fantastic. And joining us from Houston is former Groundhog Challenge champion Ann Manning. Good evening, Ann. Hopefully that's cooled down a little bit down there.
Yes, it has. It's not so bad today. We've had a lot of rain, so not much sun.
Well, getting a little bit of rain is probably a great thing in Texas, as long as you don't get too much.
Yes.
All right. And again, my name is Mark Robertson. I'm founder and managing partner of Manifest Investing, one of the co-sponsors of this activity. And as Ken said, we are coming up on our 12th birthday. Our sole mission in life is to take an idea and share it with you. And we keep score. We keep track of the things that we do. And tonight's session will include a little bit of chippiness. So let's go ahead and get underway if you're all set to go, Ken.
I'm all set, Mark.
Okay. All right, here's our reminder, our boilerplate legalese reminder that no investment recommendation is intended. This is an educational demonstration. We will be talking about real companies in real time, using for the most part their real prices, current prices. Everything that we do here is intended to demonstrate and illustrate the techniques, methods, and philosophies of the modern investment club movement, whether promulgated by Manifest Investing or the National Association of Investors, now known as Better Investing. There's 8 decades of wonderful lessons, and we just love exploring them. The stuff that you hear us talk about will be our opinions. Please do your own homework before making a decision. We do try to remember to acknowledge when we hold stocks or know somebody who holds a stock in their portfolios, simply because the SEC likes us to do that. But if you'd like to be on the email reminder list for this event, please send an email to nkavula1@comcast.net. We do this literally or almost always the final Tuesday of the month at this time, 8:30 Eastern time. And like I said, we've been doing it now for almost 12 years. If you'd like a copy of the slides or if you have follow-up questions, send me an email, markr@manifestinvesting.com, and we'll see what we can do to help. Let's go ahead and set the table a little bit. Here are the companies that we will be presenting: Axos, NVIDIA, First Foundation, Wealth Management, and Micron Technology. This is our standing agenda that we've been doing for a while. We do keep track of our results. We do challenge stocks which are worthy of a selling consideration or a timeout. And we do hold an audience poll at the end. If you are here as a newcomer, we do keep it fairly casual and informal. And a big welcome and hug to you. And you are invited to participate in the poll when we get to that point. If there is time, and it's probably likely we'll have some time tonight for some open Q&A at the end. Anything else you'd like to cover there, Ken?
No, I'm ready to get started, Mark.
Okay, here's our reminder. We're simply sharing an idea, and we're going to share the analysis that revolves around that idea. We do try to, we encourage non-core, special opportunities, special situations. We don't let them dominate the portfolio, but we do have an objective of beating the market as measured by the Wilshire 5000 by 5 percentage points over the lifetime, and we do keep a tracking portfolio that does that. We would like also to have the majority of our selections, our decisions, outperform the stock market in the mirroring or matching investments in those decisions. Here's a look at our longer term performance. Starting up at the top, you can see that we have a rate of return since inception. That is an annualized rate of return done with the same type of calculation that is performed for investment clubs using the Bivio or club accounting software if you're in an investment club, or if you use one of the portfolio record keeper type products out there. 18.8% since inception. The market, as measured by the Wilshire 5000, has actually been on a tear. It's actually been quite a challenge to stay ahead of this market. We were a little bit further ahead of it a little while back, and we're doing well and still losing a little bit of ground. But our relative return is right at that 5% level at 4.9%, and we hope to stay there and hopefully bump that back up over time. But it's not easy with a market roaring as it has, and but that is cause for celebration, and we hope to continue doing that sort of thing. We are up to a outperformance accuracy of nearly 60% at 58.5%. Any comments or questions at this point?
Well, we just have to do a little bit of work to get our par back up to some places where we can move our return back in the other direction, Mark.
Yeah, 5 is nothing to sneeze at. We'd sure like to be in that above that red line, but we just have to make good selections and take care of the portfolio. All right, here's an actual look at the portfolio. We actually have the portfolio broken into 3 pieces now. One is all of the stocks. That's this one, where you're looking at the top 20 by percent of assets. So basically, these are ranked from the largest positions in a descending order. So the largest position in the portfolio is Microsoft, and it ranges down to the fairly recent selection. So these are just the top 20. There's 60 or 70 actual positions in the portfolio, but you can see these are the ones that have the most influence on the portfolio. The legend up at the top actually gives you the number of times that a company has been selected. So for example, EPAM Systems in the number 2 slot has been selected 7 times. You see that up here. So every time that a knight or a damsel or the audience votes for a stock or makes that decision, we invest $1,000 into it. So $7,000 invested in EPAM is now worth almost $32,000. And for example, one of those selections we talked about this afternoon at Bull Sessions, where it was actually 4 years ago to the day that Cy Lynch made one of his selections of EPAM, and that company has been on an absolute tear. You can see that the total portfolio checks in with a projected return of about 10%, 10.3%. We'd like to see that be a little bit higher. Quality is excellent at 84.2, and the growth rate's pretty good. We'd like to see that a little bit higher too at 11.7. So in coming months, we hope to always underscore and emphasize the hunt for more rapidly growing companies. Just keep that, and excellent companies, to keep that number up. Anything jump off the page at you, Ken, or Ann, or Herb?
I always like to look at Costco, Mark, knowing that it's a single selection, and to make the top 20 and be selected only once is quite a feat for any company. That $1,000 has grown to over $8,000, and our only regret is that all of us didn't pick Costco 2 or 3 times in the last 12 years.
Yeah, and there's actually a fun fact that's hidden. It's in the return of the total portfolio, but are you aware that Costco has special dividends? And they've actually paid out some fairly sizable special dividends over the last 10 years, 4 times that I know of for sure. And that number is not reflected like a traditional dividend would be in the split adjusted price. It's just simply cash that we received in the portfolio. So the number's actually better than that 8,300.
Well, we'll take it.
We'll take it. The other one that I will point out that because it's on many radar screens, Ardelyx is back up at the $8 level. It was over 8 until today. So that one has been behaving pretty well. That's one of our special situations plays. But yeah, fun from top to bottom. Amazon is also a 2-time selection, by the way. So $2,000 invested in Amazon is worth $23,000 now. So that's always pleasant. We did a few months ago break up the portfolio into 2 pieces. We do maintain the single portfolio, but now we have the 2 pieces, core and non-core. Non-core is the stuff that you see underneath the guy sticking out his tongue there, Albert, getting a little bit out of control there. But younger companies earlier in their life cycles could be a turnaround situation, could all be all those things, including a company like Ardelyx, whereas the companies in the core are up straight and parallel and all that kind of stuff. So you can actually look at the details of all 3 portfolios using any one of those links. Those are all public. You can check them out and take a look at all of the positions. Any comments or questions, Ken?
Well, one of our attendees, Dennis, is reminding me to remind everybody that when you're looking at the bottom averages, especially on a page like the slide before, those averages reflect the entire portfolio, not just the 20 stocks that are being displayed.
Good point. All right, let's go ahead and finish up with this part of it. Again, just to show the top 20 portfolios in the core, amongst the core holdings. A couple more sneak on here. Regeneron had a good week. They were involved in that successful gene editing on a live patient this week, along with another company. And many of these are up quite nicely here in the last month. So that's what has driven our par back down again. So once again, good news, but when stock prices soar, projected returns sag, and we have to do some TLC. Here's a look at the entire collection of non-core. I squeezed them all onto the page. These are all that we have classified as non-core, and they're all performing fairly well too. I'll point out that the one non-performing selection that we've got that's really non-performing, A2 Milk, it's mine. It was seconded by the audiences. That has gone up from the $4 level to about $4.74. So I actually gained approximately 20% in the last month. So we'll just continue to hope for a few more 20% months.
All right.
So a number of those are doing quite well.
Drink that milk, yeah.
Yep. All right. So here are the stocks which would fall into sell consideration if this were a traditional investment club meeting. These are from the core portfolio up here. And again, for a core portfolio, for the core holdings part of it, we are basically saying that we would consider selling if the portfolio needs it, and or any one of these was approaching money market rates, which are basically 0. So neither of those really qualify for that. I will point out that Infosys Tech has been red hot, along with EPAM and some of other size favored information technology companies. But I would argue that these are both still pretty much core and still hanging in there slightly above money market rates. So again, nothing to panic about. We just need to pick some good stocks. The non-core stocks we qualify.
Mark, just to repeat, what is my part today again?
About 6.6.
Okay.
So we're about a percentage point short. So we just have to, again, start back the march of climbing back that ladder. Okay. The non-core stocks which qualify for at least some attention. And again, a non-core stock, first of all, that first one is right on the border of being a core. So I would tend to think of it as pretty much a core stock. It has gone kind of crazy. The relative strength index is up at 80.5. So it shows up down here also as being potentially overheated. Again, that is a potential selling opportunity. Don't need to, but at least it can be thought about. And in the case with Illumina, I would be less likely to sell it less than 6.6. I would want to hang on to it until it got down to very low single digits. What are your thoughts, Ken?
I agree with you, Mark. I think that Illumina When we first discovered Illumina and started talking about it, there was no doubt that it was a non-core stock. It was dabbling in genes, G-E-N-E-S, not the pants. It was talking about coming up with the complete sequence of the human genome and then making machines that could drastically reduce those speeds. Well, they've succeeded in a lot of those goals. They've taken the time that it takes to sequence the human genome down to literally hours now from where it used to be, which was months or longer. And I think that as it does that more and more and makes this part of normal, with quotes around it, technology, then we have to begin to consider the company as being less and less non-core and more core. So I would want to leave it in the portfolio at least for one more month and see what transpires.
And I guess the other thing I'd point out, was that Herb?
Yep.
Go ahead, Herb.
We're in the process, a couple of our clubs are looking at the pie charts at the end of each of your reports, and I'm wondering how the pie charts look for both the core and non-core, and how that affects any decision making that we should look at in the future for stocks that we might want to present.
It's a good reminder. Maybe what we can do is add it to the agenda for next month to actually take a look. And we don't obsess over it, but we certainly, when we see technology or financial stocks or whatever becoming very dominant, it's just simply a reminder to maybe focus on opportunities in other areas.
Yeah.
Yeah,
Mark, we're getting a question mark about, can you give us a rough total of the amount of money that has the amount of imaginary money, and I'll stress that to our audience, this is not a real money portfolio, but the amount of imaginary money that's been invested. I know it's been $5,000 a month now for maybe the last 7 or 8 years, or maybe longer than that. Can you give us a rough idea of the total amount invested?
Yeah, and in fact, the number is 618,000. So 618,000 has been invested. Okay, but we have actually taken out 580,000, and we still have 538,000 as a balance right here. Let me repeat that, because it can be quite confusing. Because we've actually, when we close out a position to measure the results of a decision, we basically cash out and measure the internal rate of return on that calculation. So we have invested 618,000. We've actually taken out almost 600,000, and we still have 538,000 in the portfolio. It's kind of,
I'll take those numbers every day.
yeah, I mean, it's just staggering. I mean, some people like to think of it as we're playing, we've taken out all of our 600,000 and we're playing with house money now. And it's really kind of amazing.
Yeah, the accounting for a tracking portfolio is a little bit different than the accounting you would use for a typical club portfolio, where you reinvest the money into other stocks. When we freeze a position, those dollars freeze. They do not go back into the value column that you see tallied here on this sheet. So the numbers that Mark is giving you are truly staggering values, especially considering that we've been at this for a relatively short amount of time. 12 years in the life of an investor is not as long as I'd like to have to really let my money compound and compound and compound again.
I might put a slide together on that to help out with the explanation next month. So I'll make notes in both of those cases just to share those details. Okay,
Terry, one more question, Mark. Terry is asking us to confirm that on a typical month we're putting in $5,000. And Terry, that's correct, but we have to assume on a typical month that there are 4 presentations plus the audience's choice. That's where the $5,000 come from. Occasionally, we only have 3 presentations, so that means we would be investing 4,000. Occasionally, we'll have 5 presentations, and that means we'll invest 6,000. We have had times where the results of our audience poll have been so close that we've invested in 2 stocks during one particular evening. So that $5,000 is just kind of rough rule of thumb, and it's not a number that you can use to do arithmetic with for all the months that we've been together. Tracy wants to know, where does Mark get the RSI data for Illumina? Stock charts only shows 77.8 on the daily view.
Well, that could be a day old. I mean, they do move around quite a bit, so it's right around 80. That might be yesterday's RSI.
I think also, Mark, that you're looking at an RSI based on a little bit longer term view than daily, aren't you?
Well, not for that one. We look at
Not for that number. Okay.
we try to look at the same one that all the rhinos do for that purpose. But when we look at our long-term monthly chart, we are looking at a different value.
Okay.
Very different.
So if you go to stock charts or big charts right now and look at RSI, that number is probably the most current. This 80.5 might be a little bit behind, but not much.
Yeah, it's going to be approximately 80, no matter where you look. Okay, and let me close this part, and then we'll get ramped up here with Ann and Axos. But I do want to close out with a couple of things. First, the good news. We have 225 current positions in the portfolio. The average, absolute annualized return for those positions is right there. That's how we've managed to build the last few years. That's kind of what accounts for what you see right here. And we hope to see that continue. So that's fun no matter how you measure it. We actually only have a couple of positions that are more than 20% behind the market. And here's where I'm going to reach out to the audience and say, you guys don't vote for my selections very often. And this is one I wish you would have skipped.
Oh, I thought you were going to say, and here's why.
No, my selections actually do pretty good in general.
And I should be real fair, Mark. Your selections do fairly well. It's just this one is having some trouble. So
this one is in trouble with China, and most of their product line is out of New Zealand and Australia, and they're having trouble with selling infant milk and milk in China. So hopefully all of those trade waters will get reopened and things will get better. But that's what accounts for what's going on here. That, and they finally had a fairly nasty earnings report, and that took some of the air out of the balloon. So that's my message for the audience. Just, be selective when you're choosing to follow me into the sinking boat. All right. With that, let's go ahead and turn it over to Ann Manning. Ann, this is one that's in the portfolio, so Ann will be doing an accumulate on Axos Bank. So take us away, Ann.
All right. Thank you, Mark. Yes, I presented this in October of last year, and it's now been presented 4 times, and so this will be the 5th. The reason I decided to do it is, if you've been listening to the bull sessions, there's not a whole lot out there that's in the buy zone, and I still think this is a good stock to buy. So Cy has already done a great job of filling you in on all the stuff about this bank, but I wanted to give you a little bit more information to help you see maybe where the management is going with this bank and what the strategy that they have. So it was started in 1999, and by these 2 men. Jerry Englert is no longer with us. I tried to find out about Lewis Evans, so I don't know if he's still with the company or not. I couldn't find out. But they did start this on July the 4th for a particular reason, because they wanted to show people that they could go and do their banking even though it was a holiday. And that was their premise. And he also, Mr. Englert, had a daughter, that was her birthday. And they also wanted to say this was an independence from traditional banking. So I think, you know, their strategy was good. If we all remember back to 1999, very few of us were doing our banking online. And this bank is strictly online. They do not have branches. They launched in 1999, and they with $14 million, and they were profitable in 14 months. They now operate in all 50 states, and their goal was to have a bank with no branches and still be profitable. Next slide. In 2014, they purchased the bank unit of H&R Block, and you can see there what they got out of that. In 2018, they launched their Axos Realtor, which is a good deal for Realtor if you happen to be using their bank, so you can track their mortgages through the bank. My husband is a broker, so I know he does this stuff all the time. So they were not necessarily the first internet bank, but they were one of the first internet banks. Next slide, please. In 2018, they kind of went on a spending spree. They purchased the bankruptcy division of Epic. I'm assuming that's what it's called. Then they purchased deposits and customers from Nationwide Bank, which they still have a business relationship with them. And then in December, they purchased the deposits of MW Bank. And I didn't know what that was, so I looked it up today. And it is the Modern Woodman Bank.
Ooh.
And they are out of Illinois, I think Rockport. And they're part of the Modern Woodman. That's some kind of fraternal organization.
Mm-hmm.
And they decided they wanted to get out of the banking business and just concentrate on insurance and annuity business. So that's the reason they sold their banking part to Axis. Also in 2018, they changed their name from the Bank of the Internet to Axis Bank because they had all these different units and they wanted to have one name. And that's the reason they changed it. And they went from the NASDAQ to the New York Stock Exchange. And just in the last few months, they've announced they are acquiring E-Trade, which is kind of something that they, like Schwab bought TD Ameritrade. So it's kind of seems to be their strategy to fill out different areas of their banking units. They started out in San Diego, California, but now they're in Las Vegas. So I couldn't figure out why they have offices in Utah. California is obviously where they started. Kansas is where H&R Block is. In Ohio is where Nationwide is. So again, I don't know why they're in Utah, but they are. So they've grown from 35 employees to they have 1,099, and the owners own 10.55% of the bank. They have assets of $14.8 billion and deposits of $11.6 billion. And their fiscal year actually ends tomorrow. Okay, next slide. I got this off their website and I thought it was very interesting. This shows their customer base. And obviously you can see it's mostly around metropolitan areas. The one place that kind of stuck out to me was Florida. I thought, and that was one of the reasons I looked up the different companies that they had bought, thinking maybe they were out of Florida, but they weren't. So I'm not quite sure why Florida is so heavily covered there. One thing I could come up with, there's a lot of senior citizens down there that use the internet to do their banking. So, but I couldn't really come up with anything for that. So anyway, that gives you an idea. They are all over the United States to have no branches. So, okay, this is the manifest analysis. This was not the one I gave him because this is today. He changed it on me. But I will tell you, the one I sent him Friday was the par was 23.5. And about 2 hours ago, I pulled this one up and I'm going, what the heck happened? So if you go down on the analysis, you will see that there was a new fundamental data update. And so it went from 23 to 13, which kind of bummed me out. But when I got into it, then I realized that this was more in line with what I had done. So it made me feel better because I was like going nuts this afternoon. So, okay, next slide. Oh, I'm sorry. Let's go back to that slide. If you, you messed me up there, changing my slide on me. Excuse me.
Sorry.
That's okay. If you go to the regional banks and pull them up and sort them by quality, there's one bank that is quality of 99, and then there are 4 banks that are 97, and Exos is one of them. So it's one of the top 5 banks and regional banks as far as quality on Manifest. Okay, next slide. One of the things I like to do is I like to get other people's opinions and see what they're thinking on how they their judgments on stock. And those of you who are members of Better Investing, I don't know if you know this is available, but I thought this was a good idea to give you these instructions to find this. If you go in, and you can read this later, how to do this, it will bring up a list of all the members' judgments for the last 90 days. And if you select all of them and then go down, it will give you the average of all of those judgments, which I have find kind of helpful, knowing what other people are thinking. See, maybe if I'm on track, am I too high? Am I too low? And I think this is something you might want to check into. Although I will caution you, I have looked at, I just kind of quickly go down as I'm scrolling down. I've had people have outrageous growth amounts. It's unbelievable. So I deselect those and take them out of the, so that it doesn't affect the average. So next slide. So you'll see that for Axos, there's been 277 members do their judgments forecasts in the last 90 days. And these are what, if you went down to the bottom, this would be what their average numbers are. And if you were to put those in an SSG, it will come out just barely in the hold zone, although it might change because the price has gone down just a little bit. And then it would come out, the average return would be 12%. So you can kind of see that after the Manifest data got updated today, that's more in line with what they're saying also. Next slide, please. Okay, this is my SSG. I'm a very visual person. This looks great to me. This is what we want. We want up, straight, and parallel, like Ken always says. You will notice the last quarter, it has a little bit of a dip down. And it took me a while to figure out what that was, but I finally found a report. Their assets increased for the third quarter over last year, but because of what they were settling the end of the stuff from buying H&R Block, they had some cost that did not, or not cost, they had some income that they normally get from H&R Block. Well, that has gone away because they have finished whatever they were doing to change over H&R Block, the bank. And that was one of the reasons that they had a dip for this last quarter, which made me feel better because I couldn't understand, because they're doing so well, why they, suddenly had a dip. And that was all I could find that, that the problem was. But pretty much everything else across the board, they did great. No issues pretty much on anything. I selected 17.2% growth. That I thought that was in line because they historically have done as much as 27%. I personally, whatever I do the sales growth, I always do the same for the earnings growth. That's one thing Cy Lynch taught me years and years and years ago. Don't make more earnings than you do sales. So that was my sales growth. I don't know if you can see if the default on the preferred growth rate is 19.8% down at the bottom. That's kind of small, so you probably can't see it. Next slide, please. If you will see, their PEs have been very consistent, both highs and lows. This is one of the rare SSGs that I didn't change anything. I went with what it had because I didn't see any reason to change the high and low PE for the future. Their PE is undervalued compared to their peers. And as you can see, my high price is 124.10, and that puts me in the buy zone. The I think the 3-to-1 price to get your 15% is a little bit below 50, and so that puts us in good shape as far as our buy. And next slide, please. And you'll see I ended up with a projected average return of 14%. And if you remember, Manifest is now about the same thing, and so was the member sentiment. So that made me feel like I was on the right track. Okay, next slide. I think I just said all of that. If you want to go to their website, I've given you their website to go to. They have some really good presentations. Their one for May was very good. And they have a lot of charts, which I didn't feel like boring you with. But if you want to go and check this out for your own portfolio, I would definitely suggest it. I will let you know I do own this stock. After Cy's presentation in October, I bought some in November and December of last year, and I am glad to say I've had a 56% return on my money. And so I hope you consider Axos as a choice for tonight.
Okay. Thanks, Ann. We'll throw another Axos log on the fire.
Thank you.
All right. Our second presentation is by Herb Lemcool, and it is fascinating. One of the leading chip companies out there doing some fantastic stuff with computers, NVIDIA. Take us away.
Thank you, Mark. I really appreciate the opportunity to do this. Just to let everybody know that one of my investment clubs does own NVIDIA, and I am the stock watcher for it. So I just got assigned to that just the last month, so I started doing some more research into it. And wow, I was totally blown away. It's interesting because if you go into their investor relations, Axos special address gives an in-depth view of latest news, innovations, and technologies in A1 supercomputing. And I listened to that today. I'll tell you what, if you're not a techie, it just goes way over my head. But I mean, they're doing some stuff with each of their industries, you know, the weather, the smart cars, the medical, and everything is just gone exponentially, hugely increases in speed because of their chips. So it's just really, it's a great little company. And so I looked at the investor presentation. Go to the next slide there, Ken or Mark. So it's a computing platform company, and they're accelerating computer to solve most challenging computer problems. It's broadly recognized as the way to advance computing as Moore's law ends and A1 lifts off. NVIDIA's platform is installed in several 100 million computers. It's available on every cloud and from every server maker. It powers 346 of the top 500 supercomputers and boasts 2.5 million developers. So this is just it's a cutting edge company that is just absolutely exploding. So it's kind of interesting. Go to the next slide, Mark. So it was founded in 1993. The IPO was out on NASDAQ at $12 a share. It's had 4 stock splits. The Xbox was the fastest semiconductor company to reach $1 billion in sales. It unveils the architect expanding scientific computing, inaugural CPU technology conference, introduces the first products at A1 and autonomous driving. So this last year, their revenue went to $5.60 billion. It's up 84%. The gaming revenue went up 2.6 billion, up 106 billion, and 31% up from the previous quarter. The data center went up to 2.5 billion, up 79%. Their GAAP earnings are $3.03, up 106%. Just in the last year, the last quarter was up 31%. Non-GAAP is per share is $3.66, up $103. So this company is just really ticking on all cylinders. They also have great recognitions. Harvard Business Review, the CEO, top 100. Fortune's best places to work. MIT Review 50 smartest companies, most admired companies, top 100 best corporate citizens, and Dow Jones Sustainability Index. So from the chip vendor to computing platforms. Next slide. So they're into gaming big time, A1 computing. They're into the AR, VR, they're self-driving cars. They're into, they've just accelerated the platform so people can be able to use these, the developers can start using their chips and start to be able to go into areas that they've never been able to do, like the splitting of atoms. They can now split them faster than they've ever done it. I would recommend anybody, if you're interested, to go into their website. They have a special address bringing connected intelligence to every industry. You can learn more about what's going on there. They got a special presentation on what they do and how they do it. It's just a great little website for them to go into, and I'd highly recommend people to go into that, go into investor relations and go into the support. And it's they've also, NVIDIA and Google Cloud announced an A1 on 5G lab. Industry's first open invitation lab will speed up A1 app developments for 5G. And you can learn more there. Next slide, please. So this is my stock selection guide. As you can see, up, straight, and parallel, they got railroad tracks. They've got one little dip in there. And currently it's right at the top. If it's price bar and it's done, it's just gone crazy from about 15 to now. It's just absolutely has accelerated. Next slide. So as you can see, the next profit is the 29%, the average. You can see that their averages of the last 3 years, 33, 27, 26, the average is 29. The earned on equity is really high. They were at a high of 46, it's now 27, probably more average of 33.8. And the debt to capital is a little bit on the high side. They've got added more capital or more debt because they're purchasing another company called ARM. It's an ecosystem. So I'm sure they added some more debt onto that. So as you can, the current price earnings per share is $8.45. They pay a dividend of 64 cents, and it's 7.6% of their AL. The current PE is up in the nosebleed section of 84. And but it's just really gone really high. Mark, go ahead. So as you can see, looking at the high price, the low price, it's in the hold zone right now. Their rate of return is only 1.4%. If I look at Mark's manifest investing, he's got a par of 3.1%. The current price of $800 a share going up to $900. And, their price has just gone up. Their quality is holding up extremely well. So it's really, you can't complain about this kind of a company, especially when you start looking at the technology is really changing how we're going to be able to see everything. They can take their weather forecasting and forecast what your weather is going to be at your city at any particular day and any particular time. They're also the self-driving cars. Tesla is using this to be able to increase their self-driving car because of the speeds that are involved with this chip. They're going to, I think, increase the amount of how self-driving cars are brought into the market today. Next slide, please. Nope, that's it. So anyway, that also on July 19th, they're going to have a 4-for-1 stock split. That was approved at their annual meeting on June 3rd, and they're going to increase their shares from 2 billion to 4 billion. So, and their revenues are expected to be 6.3 billion. The margins are 64%. So this is a rather interesting stock.
Good stuff.
Even I put the value line, and just looking at the price bars going up, and they think the shares are timely, may appeal to momental accounts. The recent run up in stock prices above our 3 to 5% range. So I'm not sure where it's going to go, but the technology is going to take it, I think, beyond what these pars are already showing. Thanks, Mark.
Yeah, and Herb, I think it's actually an interesting example of a company. I'm not sure I like the price point, a whole lot as far as an entry point, but the Nicholson used to talk about when you have a high momentum, high growth company like this, they really need to be given a lot of leash. And I think it's an example of one of those. In fact, I'm going to make that point again here in a few minutes.
Yeah, it's interesting because I looked at the Better Investing, looking at member sentiment. I think there's 17 people have done a stock selection guide just today.
Okay. It's definitely on the radar screen.
Yes, it is.
All right. So with that, Ken is back for a repeat selection on a fascinating company that's being a bit innovative, but more just doing some real good plowing in the wealth management field. So take us away, Ken.
Thank you, Mark. A week and a day ago, we had a bull session, and we talked about one-hit wonders, stocks that had been chosen at the roundtable only one time. And we lamented the fact that some of our one-hit wonders were absolutely wonderful and should have been picked a number of times. And some of our one-hit wonders deserved having just one hit, and they deserved to disappear as quickly as they could. I made a resolution to myself on that bull session that I was going to turn one of my one-hit wonders into a two-hit, and I hope that it was going to prove to be a good investment for the roundtable portfolio. The name of the company is First Foundation. It used to be called First Foundation Wealth Management, hence the ticker FFWM. And if you'll do one click for me, Mark. This is from an extremely comprehensive investor presentation that they have on their website. I would urge you, if this company is interesting to you, you can get any answer to any detailed question that you might be looking for in their investor presentation. They've put a lot of time, a lot of thought into gathering data in such a way that it's easily understandable. This company has, and you can read right along with me, $7.1 billion in assets, an additional $5 billion under management, and $1.2 billion in trust assets under advisement. It has a proven business model with its combination of First Foundation Bank and First Foundation Advisors Group, and it operates basically in 4 states: California, Texas, Nevada, and Hawaii. There are 21 branch locations, and you can see that it focuses on 3 core businesses. I'm not going to read them to you, but look for a moment at the people that they're targeting as clients. This bank targets high wealth individuals, high wealth households, but it also targets businesses. It does a lot of loans to businesses. It doesn't neglect the individual account, but it does have a focus on investing, on taking the money and making loans to businesses. They indicate that a focus on providing exceptional service is done at every step of the road. Next slide, please, Mark. The branch offices are located in the West. You can see the location, but their headquarters happens to be in Dallas, Texas. They also have a branch office or two in Dallas, and they make a big point that they like to put their branch offices in communities that are expanding and that have a high level of affluence. The company is not going to make any bones about it. They are looking for affluent people, and they are looking to serve the needs of the affluent folks in the West and in Hawaii and in the Dallas area. They feel that the Dallas-Fort Worth area is one of the fastest growing areas in the entire country, and there will be more expansion into the state of Texas as Texas continues to grow. I don't know how many of you realize it, but Texas gained 2 more representatives in the last census at the expense of my state and California and Illinois and Ohio and quite a few of the other states that were losing relative population. So this expansion into Texas is something that they are really pushing with a strong poke in the backside to make it happen. Next slide, Mark. They like to make a point that they serve generations. They go from the boomers to the millennials, and they try to provide plans that allow the boomers to enjoy what they've built and what they've put together in a nest egg. They have plans to help the Gen Xers grow their money, and they have plans for the millennials to help them begin to build a small portfolio, which then they can turn into growth and then enjoyment. They are especially well positioned to facilitate the great wealth transfer that's going to occur. Read these numbers, folks, and if you're a typical Better Investing audience, then we're mostly baby boomers talking to each other. Read these numbers. $48 trillion from the boomer generation alone going to the children in the next 15 or 20 years. The biggest generational wealth transfer ever, with 57% of that money going to the younger folks on the client list up above there. Next slide, Mark. Here's how their loans break down, and this is just a typical graph that you can find in this investor's presentation, and it just makes the point that a lot of their loans go to multi-family homes and places to live, you know, four-unit apartments, high-rise apartments, things like that. In addition, a quarter of their loans are in the commercial business field. Only 15% of their loans going to single-family homes. So this is not the traditional mix of loans you would see from a local or even a regional bank. This one has a real heavy tilt towards business. Next slide, Mark. I just can't fault these lines. I look at these lines, I don't see the pandemic. I look at these lines, I don't see any really disruption from when they became public until the end of the last quarter. The last quarter had sales of over 20% and earnings of over 70% growth. I've learned to look at some numbers when it deals with banks. I want to see good, solid growth in assets because that's the lifeblood of the bank. And I look to see that the 10-year, or in this case, it's a 9-year history of growth is at 33% for total assets. That compares to a 24% growth in sales and a 23% growth in earnings per share, historical earnings per share, certainly right on track. I also like to look at return on average assets, which is displayed on the stock selection guide, the online SSG. 1.25 is considered a very, very good number for a bank. And this particular bank hit 1.27 in 2020 for its return on average assets. And what I find so compelling is that if I look over that entire 5-year period with the light blue background, I see generally that this return on average assets is growing. The average 5 years is now at 0.88. And if they can continue to maintain these numbers, then this is going to be just a blowout kind of a situation for the bank to be in. Next slide, please. I judged sales and earnings to grow at about 15% next year. I used a high PE of only 14. Notice that's more akin to the last 2 years than to the years previous. I used a low average PE of around 8, and again, much closer to the last 3 years than to the last 5 years. I used a payout ratio of about 15%, and I ended up with a par number of 16.3. Definitely a buy, 5.6 to 1. I always use manifest as something to verify and validate my thinking. And if you go to the next slide, you'll notice that manifest par at the beginning of trading today, this is not a closing number. Manifest par was within a 0.5% of where my par was on my SSG. Manifest was analyzing the growth in book value rather than my dependence a little bit more on traditional sales and earnings, but we basically came up with the same general potential annualized return. I feel validated when I look at the manifest number. I love to check out the Chronicle, but this is a fairly new company to the manifest database. There's only 5 or 6 months of data available at the moment, and the Chronicle's not especially compelling right now. Give it a year or two, and I'll start to have a good Chronicle that we can take a serious look at about the bank. I like everything that I see about the bank. I've taken a deep dive twice now, and I can't find anything negative to talk about. So I'm not going to talk about it except to say let's add another $1,000 in First Foundation.
I feel like this could be an invest regularly setup here.
It might be, Mark. Okay.
All right. So I'm showing about 9:30. I'll try to wrap us up in 5 to 10 minutes. What I'd like to share with the audience is how I came up with my choice for this evening, Micron Technology. I'd been kicking around a few companies that are, high value opportunities. Green Tree Hospitality happens to be a Chinese hospitality firm with operations in Wuhan. So I figured that, how do you get tougher than that? Looking for something with a lot of upside. Looked at a couple other Chinese companies, but I'm not ready yet. I considered using Ethereum. That's a cryptocurrency here tonight, but I thought Ken might shoot me. So I don't want to die tonight on that mountain, so I'm not going to do Ethereum. thought about Amazon. Amazon actually looks pretty good while I was stepping over boxes on the porch. And then I came to my senses over a cup of coffee and said, you know what, with return forecasts relatively low and an economy that's strong, but it doesn't feel like it's invincible, maybe I want to just go out there and find some really financially strong companies that have a high return on value and high return forecasts. So that's what I did. So this is the 16 companies that have a financial strength greater than 80, and these happen to be the 16 highest projected return on value. So again, that's the pre-tax income, projected pre-tax income 5 years out, divided by the enterprise value, which is going to be the market cap plus total liabilities and correcting for the cash in their bank account or wallet, basically. So Micron Technology ends up at the top of that list, and kind of surprised me. This is one that Kim Butcher had been talking about. Some fairly renowned investors, Li Lu and Monish Pabrai, have extreme overweight positions in Micron, and those are two of Warren Buffett's disciples. So it kind of catches my attention. Decent upside downside ratio. It's not quite in the buy zone, but again, with a market that's clicking away at 4, 5, 6%, not so bad. I do find it interesting that the analysts appear to be a bit confused about what they think about Micron, but we'll see how that plays out. So did I go the wrong way? I did. One of the things that I remember about Micron is when I first became involved with the NEIC in Chicago, I was actually reading my Barron's magazine on a Saturday morning. And one of the things they warned us about was the fortune cover curse. And they basically were proclaiming Micron to be the salvation company of one of the greatest companies in history and better than potatoes for the state of Idaho. And J.R. Simplot was being hailed as an entrepreneurial messiah. And anyhow, at the same time, I'm reading, on the other hand, this notion that when things appear on the cover of Fortune, be careful out there. Well, this company basically went nowhere for the next several years, if not decades. And so I dug up some old covers just to make the point a little bit. Pennies. Have you been to a Pennies lately? I mean, J.C. Penney's. They were part of a list of companies that Arnold Bernard, the founder of Value Line, put together back in 1958. They are the first and only high-quality company to disappear from that list of companies. So that's definitely an infamous. And, of course, Gordon Gekko, he ended up in jail. Here's one that many people forget. That happens to be about Enron. And back when Enron was all the rage and one of the best companies to work for, these guys were being hailed all over the place. That's Ken Lay. He went to prison too. Just some pretty nastiness going on here. The next lady over is Elizabeth Holmes. I don't think she's in prison yet, but she's facing at least 19 different criminal charges in cases that have now been going on for 4 or 5 years. I don't think I understand the legal process. And then this is not a political comment other than to say that cover actually came out at the time of the 2016 election and didn't work out very well for her. So the cover curse is real.
Mark, might it be fair to say that those people aren't all real personalities on that page?
Well, yeah.
Okay.
Fair. All right. So Micron Technology. One of the things I find interesting about the company is it is reinventing itself, and they're doing things better and faster and cheaper than ever before. And they do talk about themselves being the new Micron Technology. The presentation that's available in the investor relations section is very informative, much like what Herb was talking about with NVIDIA. And these guys are a domestic semiconductor manufacturer. I'm sure you are all aware that the pandemic has delivered some supply chain challenges that these guys are actually benefiting from. And I want you to notice that some of these key areas, they are picking up some business, and they will be benefiting from the pandemic and the changing of sourcing when it comes to some of these categories. That's the closing paragraph from last week's Value Line survey. Okay, so going back to the mid 1990s, this thing was a circus. You could count on boardroom battles going on, and a number of chief executives went in and out the doors, and other chief executives flew into the side of mountains, and just a whole bunch of real nastiness. And if you go back, way back, it just looks like this for basically forever. And the new management team came in approximately 5 years ago and began a real commitment to research and development and developing these DRAM and NAND technologies to the point where they make them cheaper, faster, cooler, and they are definitely competing with some of the real formidable competitors in the semiconductor space. This is actually from Kramer's newsletter this morning, speculating could AMD or Micro, all of these type of companies go out and basically behave like NVIDIA has. I did want to remind everybody that I did select NVIDIA, so you had an opportunity to not select a company like A2 Milk. You could have gone along with NVIDIA on this ride. And by the way, the stock price is now 800, and we closed this one out. Is that applause I'm hearing, Ken?
But not from me.
So this one really worked out pretty well, even though we walked away from it with a relative return of 63%. So I'm with Herb. This is a great company. Let's hope that they can continue to soar. Here's a quick look at the company. Again, you're going to find a little serpentine action on the top line that's not up straight and parallel. But again, they're always reinventing themselves, and they're doing a better job of reinventing themselves, becoming a little more Intel-like, perhaps a little more like some of the leading companies in the semiconductor business. Basically a $30 billion company. That's basically where they're at right now on the point. The slope of that red line is 12%, so I'm assuming a 12% growth rate. Profitability of 27%, again, feasible based on the picture that we see right here. That's much like Section 2A of a stock selection guide. I think something coming in this area on average is a decent expectation. And a PE for a company like this with the serpentine action up there and the bumpiness here and the missing earnings here. I know some of you are breaking out in hives right now. It's okay. You'll be all right. The PE could be in the high single digits, low double digits, very reasonably. I've chosen 10. Under those set of assumptions, you're talking about a projected annual return in the teens with a quality level that has actually steadily improved over the years. They have decent financial strength. You can see that they pay only 3% on their mortgage for their effective interest rate. And again, that leading projected return on enterprise value, simply outstanding compared to other companies. I see a lot to like here. I do see a company that has the potential to be very NVIDIA-like, and I just like the transformation that I'm seeing and the massive opportunity for a domestic manufacturer of semiconductors to serve a real need that's building, and it ain't going away anytime soon. Okay, so with that, I'm going to go ahead and start a position in Micron Technology and hope for the best and see if we can't hang on if it deserves to be hung on to over the longer term. So with that, Ken, can we turn it over to the poll?
And I think you will see the poll out there right now, Mark.
It's the wrong one.
It's not the right one.
It's the wrong one. Okay, give me just a moment here, okay?
I'll take that one.
Just hold on a second, okay?
I've forgotten how to actually pull up. I can do a sneak look. Okay, I show a poll open with some votes being cast.
Okay, here we go. This is the right poll now. And we have about 2/3 of you voting. We'd like to get up to about 85, 90%. We just broke 80%. I'm going to count to 10 in my mind, and then I'm going to close the poll. Doesn't cost you anything to cast a vote.
And if you're a newcomer, you're welcome to vote.
And we'll take all the votes we can get.
Okay. And I'm going to close. We just hit, oh, come on, let's get one more to hit 90%, guys. All right, we're going to have to settle for 89% of the audience voting, and looks like Axos Financial took the first place with 46%.
No,
It's the wrong poll.
That's the wrong one. I'm showing the wrong one.
How
Here
many
we
polls
go.
do you have? All right.
I just have two open. Looks like First Foundation took the first place with 40%. We have a tie between Axos and Micron, and NVIDIA at 16%. So we'll add an extra $1,000 to First Foundation.
All right.
And now it's definitely not a one-hit wonder, Mark, okay?
So Ken, the car sitting in your driveway tomorrow will be there to audit the results of this poll.
To audit the results of the poll, okay. We'll have that. Let me hide this now so you can show your screen.
Okay.
I really would like to come back to the other poll.
Well, that one that you saw was a placeholder that Mark had in the presentation. That
I
explains.
know, but
what you're
it was
looking
much
at.
better.
You mean it won? Is that what you mean,
Yeah,
Anna?
it's just one on that one. I'd rather go back to that one.
All right.
That's right. It was on Axos was on the poll. Yeah.
Yep.
All right.
So
Coming attraction.
go on, Mark. Yeah.
All right. So on Thursday evening, I'm going to do a special edition of what we have started to experiment a little bit. We're bringing back and re-emphasizing the monthly newsletter. And the whole intent is on Saturday mornings going forward, the first Saturday morning in the month, give you guys an opportunity to just kind of walk through some of the sections of the report in case you have any questions. In some cases, we'll have supplemental materials. We also run into situations where stuff doesn't fit on paper and we can share them, call it the cutting room floor, coming back to life. But it's just meant to give you an opportunity to explore a little bit. Keep in mind that every month we have the transactions from the Tin Cup portfolio. We have screening results. We have a chosen stock, a cover story. This month we'll probably take a look at an update of the Manifest 40 most widely followed companies. So you're invited to check that out. You can register on the Manifest Investing homepage for that. That will also be archived in YouTube. We'll talk about that in a minute. The July roundtable will take place on July 27th, a month from today. Ken and I will be giving a special edition, special educational session for essentially that's Cleveland, but Northeast Ohio on September 18th. And Ken, I'm pretty sure they're opening that up to attendees from outside Ohio, right?
They are. All you have to do is go to the Better Investing website and look for the Northeast Ohio chapter, and there'll be registration materials available. I doubt if they'll have those materials up quite yet, but look again at the beginning of August sometime, and you should be able to find a way to register. Meanwhile, we'll keep informing you that we're going to be there.
Okay, Ken.
So I'm assuming that the expected returns time is wrong.
No, we're going to do it in the evening.
Oh, you're going to do it
Thursday
evening because
evening, yeah.
I thought you said morning.
Yeah, what will hopefully become a bit of a tradition, if it sticks and if it's helpful to you guys, will be a Saturday morning thing. We did the first one last month. It got pretty good reviews and really did nurture some questions. And to be honest with you guys, doing those type of things, including today's bull session, the bull sessions we've been holding at Tuesdays at 2, you heard Ann mention them a couple of times. We actually dug into a couple of areas that I was kind of surprised that showed some fairly interesting information. And every day is an opportunity to learn. And I find that I learn something every day, that we're messing around and trying to do this stuff. So I still consider myself to be a beginning investor. All right, Ken, would you like to do a quick appeal? Do you have your tickets yet for Dallas?
I don't, Mark, not yet. I'm a little bit leery yet. I don't want to jinx going to Dallas, so I think I'll wait another month before I buy my plane tickets. But I plan to be in Dallas at the Better Investing National Convention, fondly known as BINC. It'll be on October 21st through the 24th. Mark and I will be doing a number of joint activities. There'll be a beginner's track. I'm going to be teaching that with Ann Cunez from Home Office. And if you are a beginner to better investing methodology, that would be a great time to come and have face-to-face instruction. We'll have one complete day plus part of another day on the beginner's track, trying to bring you up to speed on using the stock selection guide. A lot of great things going on. We're going to open the evening with a stock panel, and Mark will be on the panel and I will be on the panel, and we'll tease the rest of the group, mainly because we're not quite sure who's going to end up on the panel with us at the convention. But if you have the opportunity to be down in Dallas on those days, join us. It's always a great time. You can learn an awful lot, and the people are just wonderful to sit and talk to. They really are.
Okay, and as always, you can check in on events at manifestinvesting.com/events. That is a public link. You do not have to be a subscriber to actually take advantage of that. And let's see, I think there's at least one more. Yeah, just a quick reminder that we do archive all of the roundtable presentations, all of the bull sessions, and all the individual. In fact, the 15 sessions shown here are the 15 webcasts that we did for the 3 different successful investing conferences, which were nicknamed COVID cancellation conferences because we weren't able to meet in person. So we'll continue doing these, I think, hopefully in person, maybe a hybrid of in person and online, but we had some pretty good fun exploring. For those of you out there that are curious about projected return on value, there's a decent place to go and check it out. You can also get that update on our selling guidelines that we talk about here every once in a while. And as always, Ken and I emphasize the search for excellent, small, faster growing, promising companies. So with that, Ken, I think we can go ahead and bid the audience good evening and open the floor for some questions. I'm going to go ahead and shut down the recording.
Mark, thank you for inviting us. I really appreciate the opportunity to be able to present a stock.
Well, Herb, the thanks should be coming from us to you and to Ann, stepping in with very little time to prepare. Certainly puts a lot of pressure on the two of you, and we thank you from the bottom of your heart for helping us put on a complete program. And you two are just great. You're there for us whenever we need you. Thank you so much.
Anytime.
You're welcome. Thank you.